Hi, folks. Stan Bird here with the daily scan for Friday the 17th. Great day today. And as you can see, Bitcoin blasting off. I'll show you that in a minute. But I would say that Max Payne did not pan out this month. Doesn't always. And I mentioned in the beginning that it's just an indication, a clue, but certainly does not mean it's going to end up doing what Max Payne said it should do. And this week it didn't. The market actually ended higher. We're going to look at where it is and where it might be headed. Next Monday is a day off, so no market next Monday. I may or may not do a daily scan. I'm not sure yet. So stay tuned. Anyway, I'm not a financial planner, so anything I say is meant for educational purposes only. You need to understand your own risk profile and trading style and make your own investment decisions. So let's take a look first at, as always, we'll look at the market bias and look at that. This is pretty interesting. So another up day on the market bias chart. That's 1, 2, 3 in a row. And we had this little update right here 3 days ago. So that would have been Wednesday. And this chart is turning out to be pretty darn accurate. So I would say, keep an eye on this, if for no other reason, just to get a general sense for the bias of the market, which way it's tending to go. We're going to look at these charts here in a minute. We still do not have a medium-term up signal. So if we get a bull right here in the middle, then this will turn dark green instead of light green. But it's getting there. So let's take a look. Let's go to the market bias matrix. And I'll show you what makes up this chart over here. It's essentially a consolidation of indexes, sectors, industry groups, relative charts, commodities, metals, and currencies. And each of these are on a short-term, medium-term, and long-term basis. And each of these columns gets a percentage bullishness. So short-term right now is a 67% bullish. And you can see the orange line over here clearly shows that. The medium term still is 42%, so that's got a yellow, and long term, which takes a long time to change. That's just been sort of going a little bit up and sideways. But all of this rolled up together gives you a percentage bullish for the whole thing, and that's what this chart is all about. You can see some green up here on the short term side. Medium term went red a little bit. That's only because of momentum. Basically for this AIQ, which is artificial intelligence, turned red, but it was going to turn red no matter what, just because of momentum on the medium term. But look at all the green ones today. Let's get some more green ones, especially up here with the S&P and the Dow. NASDAQ hasn't quite turned green yet, but very close. So let's we'll take a look at the S&P, and I'll show you short-term signal right there. So it's now out of the channel, went down here and hit the gap support almost perfectly. And these lines have been on here for a while. So this isn't something that I just drew because that's where they went. I've had these on here for quite a while. So it went down and hit that and then went up, went above the 5-day, went above the 21, hit the 50 yesterday, broke above it. It's a spinning top candle. So today, and I think that's mostly because of two things. Number one, because of options expiration, and number two, because the market's closed for the inauguration and Martin Luther King. Really, it's closed for Martin Luther King holiday on Monday. So I think that's why it has indecision right there. So you really need to have follow through to see which way it's going to go. But it really looks like it wants to go higher. So barring any unforeseen events, it probably will go back up to the highs up here. So that's the S&P. Let's take a look at the technology sector. Not quite a short-term up signal yet. So we'll look at the top three: technology, communication services, right at the 50-day, and actually pulled back. So yes, it kind of went above this line, this resistance line, but pull back below it slightly. And then the third one is discretionary. Discretionary also looks like it's trying to go higher, but shooting star candle, which is a reversal candle. It did get a short-term up signal, but we'll see if that can hold. So that is a reversal candle. Again, we need confirmation. Again, I think it's because of options expiration and because of the holiday on Monday. So let's take a look at the big one, the one that I put that image out there for, Bitcoin. Take a look at what Bitcoin did. There you go, broke out above this line. I showed this yesterday, said it went right to it and pulled back a little bit, pulled way down, but came back all the way on, almost back to the top yesterday. So it's been in a short-term up. It will give a medium-term up almost no matter what it does. On Tuesday, it's probably going to get a medium-term up signal as well. But it looks like right now it's at 104,000 and looks like it will be heading back to the highs up here at 108. It hit a high today of 100, almost 106 for the high. So I don't think it's going to take much to get back up to 108. Then we'll see if it can break out or just bounce around there at that resistance level for a while. So Bitcoin looks really good right now. For those that have Bitcoin, congratulations. Nice chart. 10-year yield, we always want to watch that. 10-year yield, I mentioned yesterday, had pulled back significantly. It actually opened lower and closed higher, but closed right about almost right where it closed yesterday. So right about at the same place. So for me, it's not really saying that it's definitely going back up to 5. Right now, I think it's just going to kind of go sideways in this area right here. Could actually form a head and shoulders. There's a left shoulder, there's a head, there's no right shoulder yet. And remember, as I said, head and shoulders patterns and any pattern really are not valid until they execute. And for this to execute, it will have to go down below. First of all, it needs to make a right shoulder. And if it does, then it has to go down below about 4.5 right here. And then the head and shoulders will execute and it will go the same distance, roughly about probably down to 4, which is all the way down here, if it does execute. So it's the difference between 4.5, where the neckline is, and the top, which is almost 5, not quite, 4.8. So that's 0.3, so down to 4.2, which is right down here, right near the 200-day. But it is not a head and shoulders yet, just something to keep an eye on. All right, next thing I want to show, since today is Friday, I want to show you the monthly squeeze. This is something John Carter showed at the Money Show in Sarasota in November. And it is on the index chart. So it's on the charts page on the website under index charts right here. And that is the monthly. This is updated as of today. And you can see back here in 21, November and December, even as the market was hitting new highs, momentum was declining. This is something that John Carter pointed out at the Money Show. At that time, December was actually light blue. Actually, November was light blue. We hadn't started December quite yet. But December had been light blue, but now it's dark blue. And January now is dark blue. Now this could, if we get the next 2 weeks, which is what's left in January, if we get a really nice rally, then this could end up closing light blue like this, and then it will not look the same as over here. But if it stays like this, then this is what happened just before the 2022 bear market, all the way down to the recovery right here. So we'll continue to watch this. Down below it, these are updated every week. These have been updated today. You can see right there the date, January 17th. So these are the monthly charts for the S&P, the NASDAQ, the Dow, the Russell 2000, Bitcoin, which is actually starting to go higher now, and gold, which also is going higher. So you can always check the status of these if you want to check the long term. We have the same thing for aggressive sectors, also monthly charts, so you can see all of those right there. And same thing for defensive sectors right here. Those are all on here as well. You can look at these anytime you want to see what the status of any of the sectors are. Incidentally, for those that haven't checked it out yet, I put the better market cycles in here, which is just kind of an interesting thing. This guy was a farmer back in the 1800s, and he wanted to understand how cycles worked, specifically for commodities, for corn and soybeans and hogs and things like that. So he put together this little chart that essentially says the B years are years of good times, high prices, time to sell. And we are right in between 23 and 26. So we're headed 26. We're headed towards this good times, time to sell. A years are when panics occur. The next one here says 2035. And then C are years of hard times, low prices. This is the time to buy. So the next one for that is 2032, which is right in keeping with my long-term chart, which I've talked about many times. And since today is Friday, I'll show it again. It's on the homepage for anybody to access, whether or not you have a subscription. And this is the secular bull and bear markets. We are currently in a secular bull. All this green right here started officially in 2013. And we're actually above the trend line. So that's sometimes where we get pullbacks. You can see the pullback right here in 22. That's what it looked like, came right back to the red line. Through this whole period, it never closed below the red. Even in COVID, it traded below it, but never closed below it. So we are pretty extended right now. But if you ever want to know if we're starting to head back into a secular bear market, which typically lasts 12 years, just check this chart out and see what the status is. So we've come down, got close quite a few times, but never actually executed. And according to this, we probably have until 2029 to 2033, which coincidentally, 2032, if you remember, aligns with the Benner cycles. So that's interesting. Okay, let's look at the market carpet next. Let me close a couple of these. Market carpet looks like this. Looks great today. So all of the big cap tech stocks did well. Nvidia looks pretty good. Still in that distribution, looks like a distribution phase. I mentioned this on Google yesterday. You can see that on the chart over there on the right. Nvidia kind of looks that way as well. Apple has been actually declining for quite a while, probably headed to 220. That's probably where it could bounce. So if anybody's waiting to get into Apple, you can watch that level. Here's Broadcom, which did well today. Here's Tesla, did pretty well today, and Amazon. But none of these are back to their highs yet. There's Meta. Also kind of looks like a distribution phase for Meta. There's Netflix, had a sell-off. So interestingly over here, if you'll notice, Intel, number 2 on the list for gainers today. Intel may actually be making a comeback. So we'll take a look at that in a minute. And then Royal Caribbean is here. Broadcom is over here. PayPal. These are the ones that did well today, just for today. All right, let's look at the sectors. Now for the sectors, I'm going to go back to the website and go to the charts page because I've updated all of these. I update these at the end of the week. So all the sectors have been updated. If you want to ever get a sense for what sector rotation looks like, it's got all the sector charts over here. End of day just for Friday, then the 1 week, 1 month, 3 month, 6 month, year to date, and 1 year. So if we look at the one for today, we can see that, let's see if I make this a little bit bigger. You can see that all the aggressive ones are at the top. NASDAQ 100 was the number 1 today, outperforming the S&P. So anything above this S&P line, we're outperforming. Communication services didn't quite get above it, but it's right next to it. So all of the aggressive sectors are at the top today, unlike yesterday when they were all at the bottom. So that's what the daily looks like. If you want to look at the 1 week, here's the S&P down here. So in this case, you can see all the aggressive ones, except for discretionary. They are on the opposite side for the week. So you can really tell what actually today and yesterday, you can really tell what the status of that is. So that's something you can always find right here. You can go back 1 year, year to date, etc. Next on the list for today is the relative rotation. Here's the relative rotation. I started this from Monday and we'll step through it. So if you remember from yesterday, all the aggressive sectors are down here. They were headed towards the lower left, and all of the all the defensive sectors were headed towards the upper right. So we'll move this sideways. There's Monday, there's Tuesday, Wednesday, Thursday, Friday. Actually, oh, sorry, that's Monday. There's Monday. Monday, Tuesday, Wednesday. Now you can really see the defensive ones moving into the upper right. There's Thursday, what I showed yesterday. And notice where the aggressive ones are. They're all in the lagging sector, except for XLP, which is Staples. That's a defensive one. But all, including the NASDAQ 100, are all down here in the lower left. And all the defensive ones are up here. Utilities, industrials. Now let's see what happened today. Here's energy has been doing really well. There's today. So even with a great rally today, the defensive are starting to curl down, but the aggressive really haven't started to curl up much yet, other than discretionary a little bit. But they're not really proving that they're making a comeback yet. So we'll have to see what happens next week. But still kind of looking like the rotation is over into defensive. It's going to take a little bit more work. All right, let's zoom in a little bit more and take a look at the 10-minute chart. This is where you'll really see what happened this week. So this is on the charts page right here, and right in the middle in this blue column, 10-minute chart for aggressive sectors. You can see the S&P right up here. This vertical blue line is Monday. There's Monday's open, and we've just gone higher the whole week, especially Wednesday, Thursday, and Friday. Thursday was a sideways move, and Friday we just took off. So you can see definitely technology did a little bit better. This horizontal line is how it opened on Monday. Financials did great. So financials, discretionary, industrials, three of the leading sectors, communication services actually closed a little bit lower than Monday. And then the defensive sectors, healthcare down, staples definitely underperforming, energy slightly outperforming, utilities look good, and materials look good. So kind of a mixture. So the market looks pretty strong actually right now. So we'll see what happens next week. Again, as I mentioned, barring any unforeseen circumstances. In fact, we're actually above the previous Monday's open. So that's even better. So here's this Monday, and here this one is last Monday's open. So we're actually even above that. So that's good as well. All right, let's go to the dashboard and see what the look at equities first. So everything's green today. S&P up 1%. NASDAQ was the winner, up 1.5%. Even small caps and mid caps did well. The VIX actually went down even some more. Sectors I've looked at already. The industry groups, semiconductors, #1 industry group today. If we look at the chart for that, you can see that it has just been going higher. It actually tried to break out right here. So it hit this line going back to June 1, 2, 3 times, came up to it again and broke out and then pulled back. So that's a failed breakout. And you can see the shooting star candle right there. It's really clear. The next day was the confirmation, went all the way back down, took out the gains for this day and half of the gains for the day before. And now it's trying to make a comeback. So back above 50. So semiconductors trying to make a comeback again. So it was the #1 industry for today. There's energy, automobiles. So Tesla is in this group. Not too impressive. And shooting star candle on that one. So we'll have to be careful when we look at that, when we get back into that next week. Recreational services, coal. This is discretionary, industrials, staples, aluminum, and then U.S. media agencies rounded out the top 10. And on our top 10 combined list, Semtech, which has been in the top 10 for quite a long time, MicroStrategy, as you would expect, is back up there. Marvel, interestingly, this was on the daily scan yesterday, as was Credo. Both of these stocks were on the daily scan yesterday. I have not added anything. I won't do that until next week, till we get through the holiday. But if we look at Marvel, you can see right there. So it was on the scan yesterday, started to take off today. You can see everything's curling up. And if we look at Credo technology, it's starting to break out. It's right on the verge. It's actually breaking out a little bit above the highs over here. So this one looks like it might be ready to go. For anybody that's been watching that, the pull back to the 21 would have been an excellent time to get into that. All right, so that's the dashboard. That's it for the market itself. Next, I want to do the daily scan and see what we have on that for today. So here is the total market index, VTI. You can see it's also has a spinning top candle, indecision right there, has a short-term up signal, and it looks like everything is ready to move higher. Although I don't like how the ADX is below 25. All of this is below 25. So not a very strong trend right now. And mostly because it's below the highs, so it's sort of to be expected. But even on the daily, the ADX line, now the green just crossed the red, so it's a good time probably to jump in, but you have to be aware that it could be short-lived. So just be aware of that. So let's take a look at the daily scan that I ran yesterday. This one right here, and see what stocks we get today. All right, we have only 10 stocks. This is out of about 400, by the way, out of this list. This is the list of the top 10 list. So we'll look at each one. There's only a couple that I think look pretty interesting. So here's Deere. Deere's taking off. Looks like it's going to break out. This is one of the criteria. It needs to be coming above the zero line down here, which it is. Green line's above the 25, the weekly's above the 25. So everything looks really good. And look at the volume on the weekly chart. So volume looks great. So Deere actually looks really good right now. We'll look at the next, we'll step through them all. Fiverr International, this is Industrial Business Support Services. This is in a squeeze right here. So this might be getting ready to fire, probably above 35 and a half. That one might fire. Here's Lumentum Holdings. I have no idea what this company is. It's telecom equipment. So it's also getting ready to break out over here, just moving above on the squeeze. So it has a squeeze, not a weekly, but it does have a daily squeeze. Here's, this has been on the top 10. I've seen this many times on the top 10 list. You can see on the weekly how it's just continued to move up. It's moving up towards its resistance up here at about 106 probably. So we'll see if that breaks out. This one looks really good. Cloudflare. Cloudflare right here it tried to break out. It actually had a failed breakout, pulled back to was resistance, so pull back to support. So this one needs to confirm. So it really needs to bounce off support right here and start moving higher rather than moving lower after the breakout. But it's certainly the squeezes in. It looks like it's going to fire to the upside. So Cloudflare actually looks pretty good. Next is Perdocio Education. Again, you can see right here, it's in the squeeze, getting ready to execute above resistance, squeeze down here. So that one looks pretty good. Here's LiveRamp Holdings. This is communication services, media agencies trying to fire above resistance also. It has a spinning top indecision, so it needs confirmation. We'll keep an eye on that. SiTime Corporation Semiconductors, also getting close to breaking out. This is a $250 stock. So 227 today. No, 250 today. But everything looks pretty good on that one. Snowflake looks great as well. Has a squeeze on the daily, but not on the weekly. But it looks like it needs to get above its weekly 200. So this 190 area is what I'd like to see it break above. And that is also a little bit above where resistance is. So right here, right in this area right here is where it needs to prove itself. And it probably is going to come up here and pull back. It might create a little cup and handle. So that's the thing I think to watch on Snowflake. See if it will come up, make a handle, and then break through around 190, which will also be the 200-week moving average as well. And then the last one, UTI. in a really long squeeze. Look at that long squeeze. It's getting ready to break out right there too. It has a it has a shooting star candle, so it needs to confirm. So you want to wait a little bit. It's very extended on the weekly, but the weekly also, it's not actually officially in a squeeze, but it's just been moving sideways. So if this one breaks out, that one could run quite a bit as well. So the only other thing I want to show you is another scan that I have just out of curiosity. I ran this weekly squeeze. These are ones that just had a weekly squeeze, and there's a couple of interesting ones on here. So you can see down here with these red dots. So it's a weekly squeeze, but I'd like to see the ADX get above the 25 level. But this is semiconductors. As I mentioned, it was in the top 10 for industry groups, so it might be making a run back to its highs. CELH is not looking that great, but this is one that's just moving sideways. This was on the list for end of year tax loss selling and actually had about a 10% gain right in the beginning of the year. I'm not going to do all of these, but some that look interesting. Shark Ninja was the other one. This one, like right here, was in a squeeze here. Went above this would have hit my other scan right here back on January 1st. I wasn't running that scan at that point, but that's where it would have hit right there. And it was in a squeeze, and it's in a weekly squeeze right now. So this one is getting ready to break out, it looks like. Breakout is probably above 114. And you can see the momentum is starting to move up on the weekly chart. So this is on a weekly chart. It looks pretty good. So keep those in mind. So that's it for today. Thanks for watching. Hope everyone has a great long weekend. No market on Monday. If you like the content and would like to keep the channel going, please like and subscribe. And I will, oh, by the way, I am doing for subscribers of my website, I am doing a Zoom call on Saturday, 2 o'clock tomorrow, 2 p.m. Eastern Time, 11 a.m. Pacific Time. And I'll go through some of the new things added to the website and then open it up for an interactive conversation with everyone that joins. So you can ask me anything you want. We can talk about the market. We can talk about technical analysis and indicators, and we can look at individual stocks if you'd like. So for anyone that is a subscriber, you should have received the invite today. Check your email and your spam folder. If you don't see it, please let me know, and I'll make sure that you get it. All right, thanks everyone. Have a great weekend, and I will talk to you next week.